Welcome back to MB Capital Strategies. Today we continue with the Upstream series. Norway's largest energy group, state-backed, massive in the oil and gas business, and at the same time, one of the most active players in offshore wind and renewables. And that is Equinor. With around 5% dividends, strong cash flow, and new projects. From 2026, this is not a hype play, but an anchor of stability. In the energy sector, in this video, we take a sober look at the balance sheet, cash flow, dividend, oil and gas business, renewables, and what 2026 really brings. And this is episode number 2 of my series on upstream oil and gas stocks. Who is Equinor? Equinor is Norway's state-owned energy giant, around 67% owned by the Norwegian state, formerly known as Statoil. Today a broadly positioned group with a focus on oil and gas from the North Sea, LNG, offshore wind and carbon dioxide storage, and new energies. Production is around 2 million barrels of oil equivalent per day, mainly in Norway, the UK, the USA and Brazil. The market capitalization is currently between 70 and 75 billion euros. The share price is around 25 to 26 euros. Importantly, oil and gas continue to be the cash cow. Renewables are the future and an option, but not yet a driver of results. Let's also take a look at how I'm invested here. In total, I hold 22 shares. My entry price was €21.61. Currently, a price gain of 3.77% corresponds to an unrealized profit of €17.94 and a dividend I've already received of €19.60. And this value here is net. Let's look at the latest available figures from Q3 2025. The environment was more difficult. Lower energy prices, yet the operating business remained stable. Particularly strong exploration and production in Norway with very low production costs and high margins. Production was around 2.08 million barrels of equivalent per day. Slightly weaker than the previous year, but absolutely solid. Importantly, operating cash flow remained positive and robust. Exactly what you'd expect from a state energy company. And additionally, the share buyback program is continuing, a clear signal from the management. The balance sheet is one of Equinor's biggest plus points. At the end of 2024, total assets were around 126 billion euros. What was particularly strong? Cash and short-term investments of over 20 billion euros, moderate debt, and a high equity ratio. In 2025, free cash flow also remained positive despite high investments in new projects. The Norwegian tax system acts as a stabilizer here. High taxes, yes, but predictability and also security. In short, Equinor is financially extremely robust. In 2024, revenue was just under 100 billion euros, less than in the boom year of 2022, but still very strong. Margins remain high mainly due to efficient offshore production and Johan Sverdrup as a low-cost asset. Oil and gas continue to account for around 80 to 85% of the result. Renewables are growing, but are currently capital intensive and have low margins. Important for investors, Equinor remains an oil and gas cash flow player with a green optionality bonus. Now for the dividend. For many, the main reason to hold Equinor at all. The current dividend yield is between 4 and 5%. Equinor pays quarterly. In good years, there are also special dividends. For 2024, the total payout was around €1.20 per share. For 2025, the dividend remains stable, supported by strong operating cash flow, share buybacks, and a conservative balance sheet. Important to note, this is not a growth rocket, but an income and stability stock. 2026 brings several themes together. Rosebank project in the UK, offshore wind projects like Dogger Bank, and further growth in the LNG sector. Production is expected to remain stable at around 2 million barrels of oil equivalent per day. And of course, there are risks too. These would include, among others, volatile oil prices, political interventions, and high investments in renewables. But we have state support here, we have a strong balance sheet, and cash flow discipline makes Equinor extremely resilient. Then I would say, let's just take a look at the chart. We're just looking at the monthly chart here, and here we see our low range was at 11.57 euros. Currently, we are trading at 22.43 euros, and the high was at 42.41 euros. What does that mean? Well, my personal buying zones would be between 19 and 21 euros. That's also where I entered back then. If the value is below that, I will definitely buy more here. Ideal target zones for adding to the position, let's say, would be at the 38.2 Fibonacci. That would be about 30% currently at 14 euros. I only see such targets as realistic if the oil price actually drops as well. In combination, of course. If you also want to use Investing Pro for your fundamental analysis, you get a 15% discount through my link, even during promotions. So what is my conclusion now? Equinor is not a hype play, but a stable cash flow anchor in the energy sector. Anyone looking for dividends, security, and moderate growth optionality will find Europe's most solid player here. Now, I'm interested in your opinion. Buy, hold, or rather more risk with pure upstream players? Write it in the comments, let me know. Like this video if you're not a subscriber yet and you don't want to miss any more episodes. Then I would be happy about a subscription here. Otherwise, what's also important from my side, I've received comments that some of you would like me to simply do summaries of the most important news on specific stocks that I hold. That's why comments are so important to me, because I'm still in the building phase and don't know exactly what you want to see. And if you say, okay, hey Marco, please just give us the news on what happened with your most important stocks, let's say over a period of a week or 2 weeks or just a monthly horizon, no problem. I'll gladly sit down and research all of that for you. I have to do it anyway, and then I can happily report back to you. I just need to know. I'd say I'll incorporate that and then I'll just report on it, just news. Maybe I'll also go into the macro factors a bit on oil and gas, which is just important for us in the hard asset sector. Maybe I can also briefly combine it with a technical analysis just to pin it down. But that's why it's important that you give me or tell me what you would like, and then I can address that. That's it for the video. This video is not investment advice, but only my personal strategy. I wish you successful investing and see you in the next video.